Oh, hello everyone, and welcome to today's Forex webinar. Apologies, we started a little bit late. I don't quite know why. We were involved with all sorts of tech bits and pieces. Anyway, it's great to have you here, and thank you for obviously taking the time out to come and join us for this session. Before we start, as always, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't use money that you cannot afford to lose. Very quickly, and I'm going to be very quick. For those of you who haven't been before, we're going to obviously look at some charts, some Forex charts, what the Forex market is doing, and we're going to look at the price action, but we look at the price action using the methodology called volume price analysis, which is essentially using not just the price action, but also the volume to see whether what we're looking at on the chart is genuine. Is the move genuine or not? That really, if you want to boil VPA down to the 30-second elevator pitch, that's what we want to see. We want to know whether what we're looking at, is it genuine? And if not, if it isn't genuine, then you have a pretty good idea of what the price action is going to do next. But the Forex market, that's just the technical analysis. We're going to look at the fundamentals, and we also look at what is going on in the related market. There's a third strand to the analysis that we do when we consider taking a trade, and it doesn't really matter what time frame this is. It could be on a very fast time frame. You really have to know what is going on in background to what you see on the chart, and everything is explained in the books that you can find on Amazon. And latterly, we've also got a very comprehensive Forex program that really takes you sort of by the hand, step by step, through all these elements. Now, VPA, as I said, obviously the volume and price is hugely important. We use candles and candle patterns to give a narrative to the chart rather than bars, but you can use bars as well. And the fifth element of a VPA is support and resistance. And I know we talked about it a lot last week, those of you who were with us. We look at SNR, not just price-based SNR, but we also look at volume-based SNR, and we can do that because we've developed a very particular indicator called the volume point of control, which actually draws what I can only describe as bands across the chart, and they are cushions, if you like, of volume that will either act as support or resistance. And the best way to see it is actually on the chart. So those are your five basic principles of VPA. And on top of that, you can add your own indicators. Moving averages, you can use Elliott wave, Bollinger Bands, whatever it is that you like to use as just a way of helping you with making a decision. And all these indicators work perfectly well. One thing I would say is, especially with EMAs, is you must know how to apply them in what type of market condition. They're fantastic when something is trending, but not so much when a chart is in congestion. Part of VPA, part of what we explain in the program and in the books, is actually being able to recognize, if you like, the state of the chart, what we call the C state of the chart. Is it in a trend? Is it in a congestion? Is there volatility? Once as I said, once you've really got to grips with these five elements, then you can overlay it with what we call these secondary tools. And they're not secondary because they're second best, they're just secondary tools to the primary tools of VPA. We've also developed our own proprietary indicators that we apply to all the markets. We've got some very specific Forex ones, which you'll see here. This is the summary of the Forex one. We always start with the currency strength indicator because that tells us where the money is flowing into, what currency is being bought or not, or sold. So we start with the CSI. It breaks the pairs down into their constituent parts. So, is the euro being bought today? Is the euro being sold today? Is the dollar being bought? Is the dollar being sold? It's really your starting off point. Then we have the matrix, which ranks the pairs. It takes that information and pairs it and tells us which are the strongest pairs, which are the weakest pairs. Because when things are at an extreme, either the top or the bottom, you have the potential for a reversal. Because as a trader, you have to decide, you know, what kind of chart structure you like to trade. Do you like to look at extremes? Do you like to see things that may be overbought and they're going to be, you know, a potential sell is the order of the day? Or, you know, the other extreme, do you like to see things so oversold that they're going to bounce higher, they're going to snap higher? It works really well in this market because the Forex market is what we call a market of mean reversion. You know, there is it oscillates, it moves up, it moves down, you get these waves, and the CSI tells you where the, you know, where the money flow is. Then the matrix tells you which pairs are riding that wave of buying or selling the best, and the buying and selling of the pairs may also be reflected in the time zone that you're trading. So one pair that would do particularly well in this session may not be a pair that, you know, is going to move very much in the Asia Pacific session, because this market is also, it's very parochial in some ways. It's very tied to its time zone. So you're always, you know, you're always going to find a trade in the pound, always going to find a trade in the euro in the London session. Of course, you know, the counterpart is the dollar. The dollar will be, you know, come to the fore in London, but is much more so in the US session. So you have to understand that this is a 24-hour market, but it's actually 3 distinct trading sessions, and the impact on the price action will come from local forces and global forces. So, you know, this is a little bit of background you have to understand. The array really measures strength of trend. Again, it works on the principle of overbought and oversold. So as I said, the stronger the trend, now the stronger you have a trend in a pair, then when you do get a reversal, then the chances are that reversal is going to be, you know, it's like stretching an elastic band. As I said, it's mean reversion. When you let the elastic band go, the stronger, you know, the more it's been pulled out, the more it's going to react. And the currency heat map is looking at the pairs, but it looks at it in more than one dimension. It's not a simple ranking of the pairs. First of all, it looks at over multiple time frames, but there's also a weighting to the pairs. So it's a very sophisticated indicator. I have to confess, we don't always have a lot of time in these sessions to dedicate to the heat map. We should actually do a session all on its own, and perhaps David, if he wouldn't mind, he could talk you through that later on in the session. Right, so those are the specialist indicators that we have for the Forex market. Right, very quickly, where do we start? Well, before we go to the charts, can I just do a quick roundup of what is happening on the fundamental side? It's one of these days actually where there's an awful lot of data today. As you can see, it's all given, it's not designated as what's called high impact. These would be in red. It's basically the monthly PMIs. They always come out at the beginning of the month, and you can scroll down and you can see, well, you know, they've come in more or less as anticipated. Is there any one there that is, you know, way out of whack with the expectation? And it doesn't really look like. The only one that's really out of sync is this one that came out overnight, which is the Aussie, and that's the buildings approval, which has come out really, you know, actually very strongly, because the forecast was only 2.9. Now with the Aussie, we always say, just going back to related markets, what we mean by related markets, these currencies and currency pairs also move because of what is happening in another market. Now with the Aussie is a currency of risk. It's a proxy for risk. So if the market is in let's call it a good mood, traders and investors are taking on more risk, the Aussie will be bought. But you also have to remember there's another factor to the Aussie which has kind of got lost a little bit in the last sort of, well, certainly a few years or so, and that is it is a commodity currency. Australia is a huge exporter of commodities. Its biggest customer is China for its iron ore and all sorts of other things. Now, commodities up until sort of fairly recently have been a bit flat, but they're now starting to take off quite significantly, and that's just not the hard commodities but the soft commodities. And those currencies which represent, you know, those countries that produce those commodities, you will find that their currency will start to appreciate, because these people have got to buy commodities and they're expensive. They're going to need more of these, and so on, so on, and so on. So keep an eye on the Aussie, keep an eye on the commodity market, and to see what is going on there. And of course, with the Aussie, you must always look at what is the Chinese data. Now, Japan and China have actually they're still on their spring bank holiday, so it's been a little bit quiet, but the market will be sort of back to full strength, if you like, by rollover tonight. Now, I also have another economic calendar. In fact, there's a third one I'd like to introduce you to. This is Financial Juice. There is a free version of this. It's a little bit delayed, but it's kind of, it's a bit more, it's much more comprehensive than the Forex Factory one, which is fine, by the way. It's a great economic calendar, not least because, I'll tell you for why. You can actually bring up a chart and you read fundamental data pretty much in the same way as you read a price chart. Is there a trend? That's what the market is always looking for. Is there a trend? Is the trend up? Is the trend down? So, and that will also dictate perhaps the reaction that the market gives to fundamental news. Now, the Financial Juice, they don't do charts as such, but they have, as I said, it's a different animal, if you like. But what it does do, which is different from Forex Factory, is sometimes it includes releases which are not on Forex Factory. Forex Factory does filter, because there are releases coming out all the time. It's taken a decision that this is what we're going to cover, which is fine, and it's fine for everyday kind of trading. But you might want to quickly go over to Financial Juice, because it's in the designation of what they consider to be important. Now, if you look at the US ISM, this is given a high impact because it's red, but on Forex Factory, it's not given such a high impact. Now, I'm with Forex Financial Juice on this one, and not least because of what's been happening in the background on the narrative on interest rates. If you were trading yesterday, you would know it all went a bit, markets all went a bit doolally. Janet Yellen, who is the Treasury Secretary, has kind of stepped on Jay Powell's foot in rather a big way by kind of, squawking on about raising interest rates. I don't ever remember in all the years we've been trading a Treasury Secretary making any kind of statement about interest rates, because that is the job of the Fed. And you wonder, and then she came back and said, no, I didn't really mean that, and what have you. She was obviously head of the Fed, and, good luck to her. She holds a very powerful position. But it just makes you wonder, what is actually going on. And the market did react quite strongly to that. Now, the ISM, do you want to take that, David? The ISM is one of these metrics that are used to gauge in going into the inflation narrative. The Fed's metric for inflation is actually what's called the PCE, and that's what you will also see on Financial Juice. Now, there is a third one. Sorry to go on about this, but it's a question I was asked by one of our students who noticed a discrepancy between a couple of calendars. And the one I think which is kind of the default one is one called Trading Economics. And what I'll do is I'll pop it up later on in the session when David's doing what he wants to do. I'll bring up Trading Economics. It's a little bit more complex, but it's well worth having as a resource, and it's free. So you might as well use it. Right. Lastly, Forex option, the option expiries. Now, we don't always, we haven't mentioned these for some time, but they are we cover them in quite a lot of detail in our Forex program. And the resource site that we always go to is Forex Live. They actually publish them. To actually get this information, you either have to pay for it, and it's very expensive, but the guys over there do, they very kindly do this for us for free. What's really nice is they've actually changed the format, the presentation, so it's very visual. And what it is, basically, all you need to know about the option expiries is they happen every day, they happen at the same time. They're contracts that the institutions have between themselves, and there are levels which are called strike prices, and they are absolutely key. What you need to look for, and what the guys have also very kindly highlighted, is the ones that are highlighted. If I just bring that a little bit higher, resolution a little bit higher, let's have a look, move that down. What you want to look at is where there are big size contracts, and I'm talking, you know, multiple billions and multiple millions. Just bear with me a second. Let's move this down. That's it. Let's bring this up a bit. Hopefully you can see that. There we are. I think, can you see that better, David? Does that come? Yeah, right. Right, so where are we today? Today's Wednesday, and what they've very kindly done for us, particularly this is a pair that you are interested in trading, is the Aussie dollar. 77.50, there are 956 million, the contracts that just will expire at, I think it's, was it 10 a.m. New York time? It's called the New York,
Yes.
9 a.m. New York time, which is about 3 p.m. London time. What happens is if the price action is anywhere near this strike price, sometimes, it's not always, sometimes you can find there'll be a lot of volatility. The price will, you know, they won't touch it. It will pull back from it. It's just something to be aware of. What makes this this significant, I said this is multi-billion sometimes, is the 956 million is a lot for the Aussie dollar, because the Aussie dollar doesn't have a big percentage of the trades, if you like, in the Forex market. So when you see, you know, it doesn't have a big weighting in the market overall. So when you see 956 million, it is significant. The other one is you've got the dollar CAD, 1.1, and you've also got euro dollar, particularly if you're a euro dollar trader. You know, you really do need to pay attention, but I would only really pay attention to things like when they've got to be over a billion. I've seen these at 2.3 billion, you know, and it's 2050, 2050. You'll also notice they're all zeros and they're all fives. And this is another feature of the Forex market, and you should be aware of, particularly when you're putting your stops in. This market works on zeros and fives. You also have to remember, this is a very practical market. This is the market for, we talk about sentiment and, you know, this, that, and the other, but this market is there because organizations, countries, they have to exchange currencies, they have to buy stuff, they buy treasuries, they buy whatever it is. And obviously, in any transaction, a price has to be agreed for the exchange. And you will find the banks, they will always quote a 0 and a 5. So when you come to put your stop loss, don't put it at a 0 or a 5. Use a, you know, an odd number as it were. And so the expiries will always be a 0 and a 5. Right. What's actually happening today, or what has been happening, because really most of the move that has come off the opening of Europe and London, I've been that, yeah, exactly, the dollar has been buying, that's now turned over. This is the hourly chart. A couple of things about the matrix is the numbers that you see at the extremes and in the indicator itself. This is the hourly chart. These are not very big numbers. We've had some moves. They've not been, you know, they've been a bit, there's been a bit of volatility, but it hasn't been in, you know, multiple pips, as it were. So I don't know who that is, sorry, love. As I said, so that immediately tells me with these numbers dropping all the time, that's 23, that's 15, kind of, they're kind of slowing down, as it were. These numbers can be at 80 and 90. And then, you know, you've had a, you know, a pretty serious trend, as it were. So what I actually did, what we did earlier on is I actually took some screenshots. Today was the day for the for euro dollar. I have to say the euro is not. I'd like to look at the euro CAD, and I have traded the euro CAD, and I actually trade the euro Aussie. But euro dollar, I'm not a fan. I've never have been. I don't know. Maybe it's my own bias, which I shouldn't have. I know, but I do. My preferred currency is the pound, and I actually shared with our students some data that I got from the institutions. It was a summary of where their best trades had been over the last year or so, and top of the pops was actually cable. Cable had delivered phenomenal number of pips. Down at the bottom was actually euro dollar. And, you know, one of the comments I made to the students, I said, you know, listen, guys, you do have, there's a couple of reasons I'm sharing this with you. First of all is to show you that, you know, this is what the institutions, this is what the trading desks are doing. And secondly, it's no different to what you do. And thirdly, if you actually think about it, some of the performances are not actually that spectacular, given the kind of resources that they, you know, that they have access to. You know, we have to make do with, you know, our obviously charts, indicators. We put together the resources to make, you know, to put together a narrative of what we think the market is going to do. Now, with regard to the pound, I didn't actually do a pound this morning. The pound is one of these. Now, tomorrow we have the BOE. As you always have to look ahead a day for fundamental news. And if you are going to focus on maybe one or two currencies and then 2 or 3 pairs that derive from that currency, you really have to get a grip on what the pairs do ahead of important news, something like the BOE. And interest rates up until now haven't really been, you know, the market's really not been bothered with interest rates because they weren't going anywhere. But with, you know, what's been happening with the pandemic, what's been happening with the cost of commodities, and what the Fed and other the Fed in particular has said, well, you know, because we're focused on the recovery, we are going to let the inflation rate, you know, run hot, as it were. So when you have something like a central bank meeting, as we have tomorrow with the BOE, the day before, price action can be, it's not predictable. Sometimes it will go very strongly in one direction. Certainly the Canadian dollar does. You will find some very strong moves in the Canadian dollar, and that's purely from observation. I can't give you a statistic on it. I can only tell you from observation and from the number of times we've done webinars before the BOC, and there have been some very strong moves in the Canadian, either buying or selling, and that usually produces a really nice snapback once the releases come through, and, you know, so you kind of fade the moves, as it were. The BOE is a bit, I can't sort of give you a definitive. You really have to kind of watch it. So sometimes you'll find that sterling doesn't do anything. It's just kind of, oh well, you know, let's all wait for the BOE and see what happens. And once that's over, then it picks up its natural rhythm, as it were. Now, this is the euro dollar. Why are we looking at the euro dollar? And we're waiting for this reversal trade, which really, I just came off here. Right, this is the move. It was about 6:45 our time this morning. This is, as we can see, there's a little bit of, prior to that, you can see the amount of congestion that was around the volume point of control. I said we look at volume, volume support and resistance, and this is where particularly it was very effective on this particular pair. But the initial move was this break lower from the VPOC at the, let's have a look, whatever it was, where are we? Let's have a look. One thing, I love MT4, but one of the things I don't like is trying to actually pull things up. There we are. David, can you see that? 120.19. Right. And we have actually a really nice example of a price waterfall. When we talk about volume, everybody understands the concept of volume, that you need, you know, effort pushing something higher, but you also need effort pushing something lower. Now, the characteristic of this move lower, as you can see here, not only did we have the rising volume, but we also had volatility, and we know there's volatility because we have these little purple candles to the top and the bottom of the candle. And what happens with the volatility candle is once it's triggered, it means the price action is outside of the average true range for this pair at this particular time. The price action then retreats to within the spread of the candle, which it did. This time it carried on lower. What happens after it's retreated in the spread, it either reverses or congests, or in this case, because there was momentum and the momentum was driven by the increasing volume that we see down below, it carried on lower. And in fact, right down to this candle, if you look at this volatility candle, there is a big wick to the bottom of this candle. So there's clearly buying coming in. The S3 comes in, which is the Camarilla. This is a price-based support and resistance indicator. It's a very, very important indicator. Very important level is the S3. We know there's buying coming into that candle because you've got a deep wick to the bottom of the candle, retreated, shot higher, and then you have this very, very big volatility candle selling there. And you get what we call an overrun. When you get price action, if you look at the angle of that waterfall, and you've got momentum delivered with the volatility candle, that is not going to stop on a dime. It's going to take, what we call this overrun. So you have to be a little bit patient. The buying came in there, supported by, because the S3 is an important level anyway, and price often stops at the S3. Then it was driven lower, and this is when the volume support came in. This is the bands that are delivered, these levels are delivered, they're derived from the volume point of control. At this point, market was in, it was happy to transact around it. There was no clear divergence. We had this divergence, as we can see here from this waterfall, but there was an overrun from the S3 down to the volume support, and that's the volume that came in. That's the highest volume on this, and that's the buying that came in. But again, you don't get a V shape. We did get the congestion moving sideways back to the S3, which it tested, and now we are in the process of having a reversal. And what's also nice is we've also got a cross on the CSI down here. This is the currency strength indicator with just these two indicators on here. And if you like, where would your entry be? Well, this is a very, very aggressive entry. That's because you don't know whether that's just a minor pause and it's going to carry on lower. It didn't. But I would say look to the S3 once it's got beyond the S3 and it's got nice support from the price-based support and resistance from the Camarilla. And in fact, you've got three lots of support here. You've got the S3, you've got volume support, and you've got price-based support. So you've got a really nice cushion there. Then you can say, okay, and this buying of the euro has come up, or you could wait until that cross and say, do you know what? It really depends on you as a trader. Now that's just one chart, that's the 15-minute chart, but we have to look at this in multiple time frames. So if we look at the daily chart, now when this move first started, this was really a continuation of the break that we see from the volume point of control on the daily chart. Yesterday was quite a big down day. It stopped on this volume support here that we see on the daily, and that candle, you can't see the wick. There was no reason to suppose, particularly with that strong break on the 15, that this would not carry on lower and it would simply, be a continuation of what happened yesterday. But we are getting a pullback, a correction, and it looks like it is a tradable one. Then the levels come into play on the hourly chart. Now the hourly Camarilla levels differ from the ones that are on the time frames below the hour, in as much that these levels are now in play for the rest of the week. And in fact, what's interesting, while this move was in progress, when I looked at the hourly chart, I said, well, I think the chances are it will probably try and get to the S3 on the hour, and then it will reverse. It actually stopped just short of the S3 because as we saw it, oh, I've shut my machine down by mistake. Sorry about that. Apologies. Hope it comes back.
Okay.
Yeah, I just clicked it off by mistake. That's where I was anticipating the move to come to a pause point on the hourly chart. It didn't quite get there because other support levels on the faster time frames came into play, particularly the levels on the 15-minute chart. And finally, a look at the move through the prism of a Renko chart, which is a non-time based chart. This is not time. This is not time. This is purely the number of pips going through the market. This is the move lower, the break lower. You know, with what it has done is absorb the volatility that we saw in that waterfall. The two attempts to rise, the trend dots stay resolutely red, the trend monitor stays resolutely red. This is, we've almost got a double bottom here, which, if you like, it's taken the price action off the time that you see on the time chart and given it this nice geometry and a nice double bottom, and now this move higher. And by using the Renko as a potential entry, your entry would be once the trend dot and the monitor, a conservative entry, is basically they match green. Now, where is this going to? You go back to look at the levels. You look at the CSI. With the Renko, once you're in a trade with the Renko, I often say look to the time chart for exit, but look to the Renko for entries and for maintaining of the trend. Now, we've seen the reversal on the euro dollar, which is going up quite nicely. The dollar is also selling off. The other pair, which I'm not going to I couldn't decide whether it was euro CAD or euro dollar. And it's a sort of similar picture actually on the 15-minute chart. We see here we also had a break lower, but this time not from the volume point of control, but it's actually from the S3. But it's a much shorter trend, as it were. But again, the volume support came in, and you had the similar move that was captured on the Renko. This move actually, it happened. It came in yesterday evening, but Euro CAD doesn't move very much overnight in Asia. But Euro dollar today, I have to say, sometimes not having a good word to say about it, has actually, you know, delivered something, and also given us some really nice examples of volume price analysis, and also how you combine it with the quantum indicators. Right, I'm just going to pass you over to David. If you've got any questions, please just pop them into the chat box. More than happy to answer them, and either do it on air or do it on the chat box.
Hi everyone, good to have you with us today, and thanks darling, thank you for that. And funnily enough, I was on euro dollar as well, which I've got up here, but I've actually got it, in fact, let me just start with the trading view, because let's just pull that over, because everything is being driven by the dollar right now. Yep, and I think so. Where are we up to date with questions? Yep, done all that. This is what's driving everything at the moment, and as always, it's a question of picking out which particular pair you're going to trade. And I have to say, it's no great surprise to see this happening, and it's a classic example of how the markets react to news like the Yellen comment. And you see this all the time. We've seen it. We highlight it all the time. You have to watch out for it. It gives an opportunity, because what you're expecting to see is exactly what's going on now, which is what we call the souffle effect, and the markets rally and then promptly reverse, because it's all seen as stuff and nonsense, and for what it is basically. But it's an ideal opportunity for the market makers to ramp the market up and then crash it down, or vice versa. Exactly what is happening with the dollar right now, which is why we've got such strong moves. And I just wanted to show you the euro dollar on multiple Renkos, because it is such a powerful way to trade. This is on NinjaTrader, but you can set this up on other platforms as well. The time frame at the bottom is associated with the Renko at the top. So basically, I've got a 15-second chart, I've got a 30-second chart, and I've got a 1-minute chart over on the right-hand side. And the Renko is set accordingly, because on the Renko optimizer on NinjaTrader, it automatically delivers the optimal size. So if I click this down, just reset it, and of course it will depend on the pair that you're trading. And then that's settle. Okay, just click on that. There we go. So that's 8. So basically that is, it's not 8 pips, it's 0.8 of a pip. If I do the same here, this is on 30 seconds, just click on there. This will always be a slightly larger brick. So that has settled on 11. So that is basically 1.1 pips on that particular time horizon. And finally over onto the 1 minute. Just wait for that to settle. And that will be slower still. When I say slower, I mean it will be a wider brick size. And that's come up at 16, in other words, 1.6 pips. Just move that out of the way. And when you use it in conjunction with the trend monitor and down the bottom here and the trend dots, it's just such a powerful way to trade. You're trading in multiple time frames. You've got your time array at the bottom here of your 3 time frames. You've got your VPA analysis. You've got all the indicators there. And then up at the top, you've got a non-time based approach, which is helping to smooth out some of the oscillations and also give you a clear view across this time window in terms of both the trend monitor and also the trend dots, which work brilliantly with the Renko. They're either below pushing up, they're in blue. If they go into transitional phase, they'll change color and then they'll change to red, and it'll also move to the top of the box as well. So you've got multiple ways of looking at the same thing. It's just such a powerful way to trade. The dollar is still declining. It's now down at 91.25 and moving nicely. And Anna showed you the price waterfall on the euro dollar. But if I pull up this is on TradeStation now. That was NinjaTrader. This is on TradeStation. This is on TradeStation Global. This is being driven. The data here is being driven by one of our interactive brokers accounts, which links straight through. And it's called TradeStation Global. It's the combination of both TradeStation and interactive brokers, so you can trade off the platform here and also use the data to drive the indicators as well. What I've got set up here are all the currency futures. I've got the 6A, the 6B, the 6C, the 6D and the 6N. So it's basically Aussie dollar, pound dollar. This is CAD dollar, not dollar CAD. This is euro dollar, and this is New Zealand dollar. But down on the bottom right here, I've got let's move that out of the way again. This is the Swiss dollar, not the dollar Swiss. So this is basically exactly the same sort of price chart as we saw with the euro dollar. This fantastic price waterfall, just perfect, rising volume as you would expect. Comes down to the S6. I've got the Camarilla level on here, the new redesigned Camarilla level. Sorry, not on this one. I've got it redesigned on TradingView. Come down to the S6, oscillated around there. Lots of buying coming in there, and now we're starting to see this develop, move through the S4 on up to S3, S2, S1. It's just a really nice example of a price waterfall, but exactly the same as on the euro dollar, down into the congestion phase and then the reversal. And just to highlight for those of you on the program, there was quite a lot of commentary yesterday in the chat room about the business of getting into trades and missing out on opportunities. And it is one of the tactics that you will have to decide for yourself. It's great getting into reversal trades, but if you were looking at this maybe down to this point, let's say, and you start to see this develop, it does take a certain amount of, I don't know what the word is, bravery is probably not the right word, but you have to be confident in what you're seeing and confident that you're prepared to take the greater risk that reversal does not occur and the trend lower continues. And that risk is quantified, that greater risk is quantified in terms of how much risk you put on the table, because you have to set your stop loss that much wider. Therefore, you have to put more risk on the table, but the reward is that much greater. You're getting in early, you're getting in at this somewhere down at this level, and now you're well into profit. Now, at this point, traders who are not in the trend will be looking at it and thinking, oh, I should have got in down here. Well, you didn't. So now you've got to make a choice. You're going to jump in the trend at this point. Jumping on the trend at that point comes at a much lower risk because there is momentum in here. The dollar is still falling. Just checking over there. Yeah, the dollar is still falling. So you have the opportunity to jump into that trend at the moment, but your stop loss will be that much closer. So it might be a handful of pips if you're an intraday scalping trader, let's say 4 or 5 pips, I don't know, 5, 6 pips, something like that. But down here, it would be much wider. It might be 15, it might be 20. That's the nature of the game. And it's something that you as a trader have to decide for yourself. Am I going to look for reversals? Am I comfortable with reversals? Am I comfortable putting more risk on the table? Or am I going to now jump in this? Am I going to be much more of a trend trader? I'm looking at those opportunities where the trend is underway, and I'm going to join those trends. In other words, the train's already left the station. You've heard that analogy many times before. The train's left the station. I'm going to jump on the moving train, and I'm going to grab a few pips and get in, get out. It's a very different style of trading. Doesn't suit, what will suit one will not suit another. You have to find out what works for you, which is why we hammer on about this in the education program. But when you are learning, you start trading micro lots, because when you start, it is not about making money. There is no quick fix to this route to making money. You cannot just jump from trading a few $1,000s to make a decent living. It just doesn't work. You can't leverage up and all the rest of it and trade multiple lots and hope to make a living. You'll just blow the account up, and guarantee it. And that's why we lay it out in such a formulaic way, that you start in this way, because in trading micro lots, these very tiny lots, you find out what style works for you, you find out what gives you consistency that you need, and then gradually you scale up from there. It is a long learning process. We make no bones about it. This is not a get-rich-quick way to get rich quick, but ultimately it will give you a lifestyle and a way of working for yourself from home where you are actually making money consistently, but you have to do it the right way. Sorry to bang on about it, and sorry if that sounds terribly boring, but that's the nature of the beast. I'm not going to dress it up in any other way. Move's still going on nicely. Let's just pull this over. Just a quick check on the dollar again. There we go. And when you're in a downtrend, the candles I'm always looking for these candles with big wicks to the upper body. This one here it slumped, went into congestion phase, tried to rally, no joy, back down again, tried to rally again, no joy, back down again, carrying on down. Where's it going to? Then, as Anna said, obviously you're looking at levels and all the rest of it. While I'm on TradingView, let me just give you a quick, can't remember what's on all of these. That's Aussie dollar on the day. This is the accumulation distribution indicator, just to give you a heads up on where we are. We are literally working on the support pages as we speak. And where are we now? Wednesday. I'm hoping by end of next week latest, we will have everything up and running. So if you have the full package of TradingView indicators, you'll get them automatically added free. If you don't, it's not a bad time to buy at $6.77, because the price will be going up to match the MT4 package at $8.94. This is the accumulation distribution, very similar to NinjaTrader. You get these terrific levels painted for you automatically. The width defines the strength. This has been tested 9 times, this one 5, this one 4, this is only a couple, we've got a little cluster there. This is on Aussie dollar daily. You can see how strong that level is. We get beyond that level, I think I highlighted the last week or the week before. Once we get beyond that level, then we're off to the races, because we've got a very strong platform in place. This is the Camarilla on TradingView, which we've cleaned up. There is an option. This is the revised version, which is very similar to all the other platforms, but there is an option to have historic on here as well. So you can switch the historic on and off. So we've built that in as well. This is the time accurate Renko. This is part and parcel of the Renko itself. You can switch between the two. If I click on here, you've either got a time accurate version or a traditional. If I go to the traditional, you just see a regular Renko brick, but you wouldn't be able to tie it to the time. What the time accurate one does, it actually ties it directly to the time. So whenever you get these congestion phases around here, it moves into a congestion phase on the Renko itself. So it's a completely different way of looking at things. It's unique. As far as we know, there's nothing else out there. It just gives very clean levels of support and resistance. It also allows you to tie it directly into the price action. So the two work at the interface of time, if you will. That's another example. That one I've got actually set to a specific size. I've got that set to 2 pips. The previous one was set to the ATR setting optimal, in other words. This is the VPOC on TradingView. Very similar to all the other platforms. That's the VPOC there. And then you've got the volume profiles above and below with all the various levels of high and low volume nodes. That's the dollar index. Finally, I'm just going to go back onto the heat map on NinjaTrader, because Anna just wanted to highlight that, and it's something we should do a lot more of. The big difference between the heat map on TradingView and the heat map on all the other platforms is that you will be able to choose these time frames. Now, I've actually set these, as you can see, 1 minute through 30, but you can choose anything you like. Anything that is on the platform you can choose, and of course you can have multiples of this as well. Does this make it compatible or comparable rather with the currency matrix? The short answer is no, because what the currency pairs down here are doing on the heat map, they are weighted, and they are weighted according to these time frames. So the 30-minute carries more weight in terms of sentiment and the strength of that sentiment than the 15, than the 15 does, than the 10, and so on, that right the way down the chain. And that is as you would expect, because if you see a change in sentiment on a 1 minute, you wouldn't expect it to have so much significance as if you see a change in sentiment on a 30-minute. So all of that is factored in automatically and recalculated all the time on this ranking ladder. So whereas the currency matrix pairs will move up and down rapidly, if you have them on a 1 minute, 2 minute chart, whatever, they will move up and down the ranking ladder very rapidly. Here, they will not, because they are weighted. So please, don't get confused and think that this is the same as the currency matrix. It isn't. I'll just drop that out of the way, pop that over there. You can see this move is still going on nicely, really nice, strong move. You've got it here on the time frames as well. It's just carrying on higher. The trend dots underneath, pushing up all the time. Trend monitor solid blue across the time horizons, right the way out to the 1 minute across that particular time window, 15:30 in a minute. Dollar's still falling nicely on the CSI. This is on 5, I think. Yeah, on 5 minute. So the dollar's still falling strongly. Euro's curled over a little bit. I mean, you might be looking at a stronger rally possibly on the Aussie dollar now. What's also interesting is we've got a volatility trigger on 15, volatility on 30, and volatility on 1. So what we're expecting now is a pullback, either a congestional pullback, possibly even a full-blown reversal, but certainly some sort of pullback is going to take shape because we've got a volatility trigger, as you can see on that particular chart there. Tons of volume coming in under that last one, huge big volume spike under there, lots of selling under that one. But the Aussie dollar is probably not rising nicely and has got a little bit of way to go yet before it gets up into overbought, although the dollar is now down into oversold. Just a quick look on the dollar, it's still falling nicely. Possibly a little bit of buying coming in back under there. There's a bit of a wick to the lower candle. Just pull that back over. There we go. Little bit of buying maybe coming in now. This is on 5 minute. We'll see how that candle closes off. So that gives us another little heads up as to what's possibly happening right now. But you've got it on the indicator here anyway, so it gives you a heads up to, okay, so we've got some pause points coming in. We expect it. We've got it down here. We know why it's happening, etc., etc. Let's just go on to the currency heat map. There we go. And looking at this is very, very different now to the one on TradingView because the time frames are fixed, 1, 5, 10, and 15 out to weekly and monthly. So whereas on the one I just showed you on TradingView, which I had set up to a 30-minute time frame, those would move up, several positions during the day. These will only move maybe 1 or 2 slots on the day because they carry so much more weight in terms of the time frame that's associated. Now the question we're being asked is, will that approach be adopted? Can we work that into these different platforms in terms of having options to choose your time frames? We need to have a look at the code and how we can work it. Just so happened that we had that flexibility within the TradingView Pine script. We'll have to check it on Ninja Script and all the others on TradeStation and everything else. But in terms of the currency heat map, the currency heat map is really 2 indicators in one, certainly at this level. The levels down here, or the currency rankings, the currency pair rankings down here, they will move, as I say, at a very much slower pace. So if you were looking at taking, let's trade a trade off the top and bottom, those trades are going to be running for days. You're not going to be looking at running those for a few minutes or even a few hours. So if you're a longer term trend trader and you're looking for maybe reversal opportunities on much lower time frames, then certainly the heat map is a go-to because it will give you these extremes. The CAD has been very strong over the last few weeks. That's why it's right up at the top. You can see how bullish it is right the way out to the monthly. Very strong candles right the way throughout, and possibly coming up to a bit of a pause point. You can also see that's true pretty much of the yen pairs as well. All 4 of them stacked at the top there. If I just isolate them out, there we go. Another 3 in the middle here, maybe they will move up. But certainly in terms of very much the commodity currencies, they've been on a very long bullish run for some time. Those who come along regularly know we've had some pretty hefty positions on that for which we've been holding for months now, for some time, and continue to do so. There's no actual reason to exit those right now. Just pull this over again, keep you posted on what's going on in the dollar. There we go. So, you know, it looks as though it's carrying on for a little bit. Probably got some support coming into play down there, but we will see. So that's really on the currency heat map. So you've got this ranking ladder which is weighted, but then the cells here give you a total view on what is going on across all the time frames, whether they're bearish or bullish. The break even or the midpoint is 0, so anything below 0 is negative, anything above is positive, and it just gives you a view on what is going across all these time frames. And it's just a really neat way of looking at it. It's all compact in this one chart, and you'll see sentiment shifting as it moves across through the cells. So it's a 2-in-1 indicator, if you like. The other, let me just pull up TradeStation again. This was, yeah. Sorry, I always have my chat box closed, beg your pardon. Right, why haven't I got the questions coming up? Ezzy, I don't see, right, okay. Didn't see an answer to my question. Apologies, Ezzy, you were buried under my chat box window somewhere from 20 minutes ago. What was the question? Explain how quickly or slowly the currency matrix currently react to market changes. Right, okay, good question. I'll tell you exactly the process. The currency matrix, you can think of the currency matrix and the currency array in exactly the same way as you can think of the trend monitor and the trend dots. The currency matrix is like the trend dots, and it will react first, much closer to the market. The currency array is like the trend monitor and will react more slowly. That, in a nutshell, is how they work and how they were designed to work. So across the 4 indices, across the 4 Forex specific currency pairs, you've got the currency strength indicator, which is the starting point, isolates out the currencies themselves per se. Then you go to the currency matrix, which works very close to the price action because it has a short look back period, and you use it in exactly the same way as you use the trend dots here, very close to price action. Then you use the currency array, which is a much slower, more considered view. It gives you strength of trend. It also gives you those, delivers those opportunities where currency pairs now are coming up to overbought and oversold, potential overbought and oversold situations. And then you've got the heat map, which kind of overarches the whole thing. Hope that answers the question, but that is the simple way to view them. The matrix and the array are like the trend dots and the trend monitor. You use them together, but they look at the times, and their reaction to market price action is very different. The currency matrix is very close. The currency array steps back and takes a more considered view. Hope that answers that one for you. Apologies, you got buried under my window somewhere or the other. Sorry about that, Leslie. So what we're seeing at the moment is continuation of this. Very nice, thank you very much. If you got in down here, bucket loads of money in there now. If you've got in up here, you're still in the trend, that's great. And you've taken a lower risk on that particular position. Good for you. Let's just drop that out of the way. This is on Aussie dollar. And the beauty of the radar screen is self-evident now. I've got these set up on the same time frames, 1 through 15, on all these currency futures here. And I've got the trend monitor, and the trends, they work on the radar screen as well. It's how we develop them, and also the volatility indicator. And when you see big moves like this in the dollar, where you see strong dollar buying or strong dollar selling, it is reflected on the trend, on the trends, and of course it's reflected in the trend monitor. So everything has now gone blue. Why has everything gone blue right the way out to the 15 minute? Because the dollar is being sold strongly. Therefore, these currency pairs are being bought strongly, and it's just a great visual way. And in addition to that, obviously you've got this very quick way of moving around the charts. This is all symbol linked and interval linked. So if I click on that one, sorry, there we go. That's already on the 1 minute anyway, but if I click on the 5 minute, there we go. Up comes the 5 minute. Trend monitor, slight divergence in color here. We moved out of bright blue into darker blue, but really didn't do anything else. Trend dots stopped a little, then we went back into bright blue. Lots of nice volume pushing that move higher. Little bit of weakness on that last candle. Why? Because we've got a wick, probably can't see it there, but it literally goes to the top of the chart, and there's decent volume under there. So possibly a little bit of weakness coming into that move now. But you can move around very quickly. You can go and have a look at all the pairs very fast. We've got a volatility trigger. Why have we got a volatility trigger on that one? Because it told us here 4 bars ago, we had a volatility trigger come in. Tons of volume, volatility, what do we expect? Congestion, it's what we're getting. That's why the volatility is so powerful. You have it up here, you know, as soon as it comes in fact, down here, what have we got? We've got 1 bar down here. This is on New Zealand dollar on 5 minutes. So we know we've got a volatility trigger there. Up we go, banging up full size. There it is. That was 1 bar ago, lots of volume. What do we expect? Congestion, possibly a reversal on that one. It's just a massively powerful tool to give you a huge amount of information in a very condensed format. And if you symbol an interval link in this way, then you can go through all the time frames rapidly. You never miss anything. You don't have to hunt around for things. You just watch this. We've got one here. What do we have? 3 bars ago on CAD dollar. Click on that. Okay, there it is. Pop it up full size for you, a bit tight there. In fact, we have one there as well. It's all there. It's just so easy with Radar Screen. And of course, you've got this on not only TradeStation Global 9.5, also on TradeStation Securities on version 10. And visually, it just tells you as well. So it tells me, you know, obviously at the moment, it's all dollar selling. So we're seeing buying, and then it's just a question of picking out which pair is going to be, you know, the most profitable. And now we're seeing the dollar moving down into oversold. This is on 5 minutes. Aussie's got a little bit of a way to go. And, you know, it's just a question of then deciding, well, now, am I going to take a reversal position? What am I going to do? Et cetera, what fits my tactical approach? And the other point about this all is, and we actually wrote about this a lot in, I think it was the binary book, your approach to the market. Are you going to take a toolbox of tools to market? In other words, I've got all these different tactics that I can apply, and I'm just I can just apply any particular tactic I like to any particular chart. Am I going to take one particular tactic across the market? Am I going to take a bunch of tactics and only attack one particular pair or a group of pairs? Am I going to take one target or one tactic and only trade one pair? All those things are possible. You have to find out what works for you, what you're comfortable with, and whether you're going to restrict yourself, whether you're going to be, as I say, you know, you're going to use the whole toolkit of tactics at your disposal, or you're just going to specialize and become a specialist in, you know, like a sniper. You're going to target one particular type of tactic and only apply it to maybe one particular pair. It's perfectly feasible. I mean, if you think about it in terms of index trading, that's all index traders do. They only trade indices. That's it. They don't trade anything else. They don't go and trade commodities or softs or anything else, bonds or anything else. They just trade one particular market all day long, get to know it really well. Right, I'm just going to stop there for a moment because I've been rattling on. Hold on a moment, just see if there are any more questions. And apologies again, Ezzy, for missing that one out. I think we're done there. Yep, right, okay. Just going to pass back to Anna. Oh, do you want me to pass back to you? No, okay.
Right, before this, very quickly, just to catch up on what's been happening with the euro dollar move that we looked at earlier. Really, things always move more slowly going up than they go down, and which is why David rather likes trading to the short side. And you could see the you know, the speed with which the momentum behind the move in the euro dollar because of the volatility that was associated with it. Now it's kind of crawling its way back up again. And you say, well, okay, we've got this reversal trade. We've looked at the, you know, we had the double bottom that was shown by the Renko. It really came off the S3 level. As the third level, the third and the fourth levels of the Camarilla are very, very important. They're very strong levels. You'll find price often pauses there and reverses as well. I explained that on this occasion, because of the volatility and the momentum behind that waterfall, you had a bit of an overrun, you know, which, you know, it is possible. that was the first attempt at a V-shaped reversal. It came back down again, but look at that one. It was the low of that one is higher, so it's a higher low from here. So you're kind of saying, yeah, that was just an overrun and it's going to look to go higher. It kind of formed this double bottom anyway, which is a very classical chart pattern, and away you go. Now, what's the next question is, well, I'm in, you know, what's going to happen? What's going to happen now? And you look back to the levels. Is this move simply going to retrace all the way back to where it first started, which was where, here we are, we're back at the volume point of control. We've got, it's clearly not a V shape. It's more of a sort of W shape, as we can see from the Renko, which is the beauty of the Renko. It kind of takes all this and puts it in more geometric form. Yes, this is is it going to pause here? Is it going to carry on higher? If it does break higher, where's it going to go? Well, the levels are there, the R2, but ultimately it will be to the R3. But as all the time, you have to be aware that, do you know what? I've clicked it off again. I keep taking off my, I'm so sorry. I keep closing my MT4 platform. I'm so sorry. Oh dear, mess, that's my computer. Come on. There we are. Right, you go back to levels. You look at the levels on the slower time frames. As I said, with the Camarilla, you look at the volume that's going into the up candles. You then go to the hourly chart and see, well, where's it aiming for? Well, you know, when was the last time it came off a point? Well, that's the R1. There's also a nice volatility candle there as well. Volatility candles also give you other levels to watch, as it were. Is this going to, Euro hasn't quite turned over on the hour, but it's down at the bottom. The dollar has already turned over. Now, if the euro carries on up, then, you know, is there any reason why this can't at least make the R1? And then you go back on the daily chart. If your frame of reference is the hourly, is the daily, and you're trading this to, you know, a longer term, as it were, well, what you're seeing at the moment, maybe you're going to have a repeat of Monday, where, you know, it looks like there is a break lower from the volume point of control, but nothing moves in a straight line. You know, looks like it's going to have a little reaction, a little pullback, a little correction. But for folks down at the faster time frames, an eminently tradable one. But if you were in this longer term, you would say, yeah, it is just what it is, because the volume under that down candle is quite high. It's sort of a little bit anomalous, because the range of this one with that volume and the range of this one with that volume, so possibly, you know, perhaps a bit of a stronger reaction that we got off this one. Again, you know, your little VPA lessons, your little anomalies, you know, what you're looking for will always come into play. And stick to the Renko. What is the Renko telling you? Well, it's holding you in. It's, you know, everything is still, it's saying, yep, okay, that looks like. What the nice thing about Renko as well is, because one of these is only completed once a certain number of pips goes through, and this is set to 3, once they start coming out quickly, you know that the market is speeding up, and, you know, some energy has come into this move. What will dictate where the move goes is the volume, and where it will pause will be the levels, price-based levels and volume-based levels. But if you're in there, there's nothing in it to suggest that at the moment, you know, yes, we have reached the VPOC back where we started, but, you know, we just have to wait. You have to be a little bit patient, watch the levels, watch the volume, watch the patterns, watch the candles. And as I said, but for coming out, I would tend to look at the time charts rather than the Renko charts. And in fact, the level I'd be watching now is this level here, is this volume resistance here that we see here, where going all the way back, which is, as I said, just approximately where we started. What's interesting is where you get a clean line band that you have here with no shadow to the bottom, it tends to be stronger. Whereas where you have a band and perhaps a little bit of a shadow above, it can, the chances are it may actually go through. And again, you've got this here. So, it has the potential. And on the daily, it has actually the potential to retrace all the way back to the volume point of control. So, there's a lot more in this move than than you may think, as long as you keep all these elements together in your head and look at multiple time frames. Right, I'll pass back to David. Thank you. So thank you so much for coming along. It's great to have you join us. We are back later. We're going to look at indices and stocks, possibly a little bit of Forex. So I know some of you come along later, so it'd be great to see you then. If you're not coming along, we'll catch you next time.
Hopefully you can see my screen. There we go. I've actually switched over onto the Aussie dollar, only because the Aussie dollar is still rising nicely, the dollar's still falling nicely, and just a nice trade. That's been pretty straightforward. A little bit of weakness coming in here. You can see the volume here. A little bit of weakness coming in here. That's why we're starting to see some sideways price action for the time being, and so on and so forth. And it's just picking up the VPA lessons as you travel along through each particular trade, and just keeping an eye on everything that goes along with it, and multiple time frames, as Anna says, and multiple time frames for your indicators and everything else, and understanding relational analysis, keeping a look on what is going on in the other currency pairs and sentiment and indices. In fact, speaking of indices, just have a quick look and see what the sentiment is like. Pretty bullish it was earlier on. There we go. NQ had a pretty rough day yesterday. Decent buying coming under that. That's starting to recover. The Dow recovered all the way back up to close above the open, and that's carrying on up. So that's they're all moving pretty much the same direction. Similar sort of price action on the ES. Big fall. It was all on the Yelland blab, and now it's starting to recover, and the NQ has got a long way to come back. We did a post the other day on the 14,000 level, which was proving very resistant and proved to hold true for the time being. So we will see what happens later on today. Just to highlight where all the indicators are, you can find them at quantumtrading.com, MT45, NinjaTrader 7.8, TradingView, and TradeStation, both versions, TradeStation 9.5 and TradeStation Securities version 10. They are all there. Always remember that if you buy an indicator from us, we will always give you a credit for an upgrade. If you're upgrading from 1 or 2, you want to buy the full package, or you want to buy a particular package, we will always give you credit. Particularly if you want to go to the education program as well, you will always receive a credit for whatever it is you've purchased in the past, so you never lose out. This is Quantum Trading Education. This is where you'll find the program. It's called the Complete Forex Trading Program because simply that's what it is. It is comprehensive, which really doesn't describe it to do it justice. It's a huge program, but it will teach you all you need to know to become confident in trading this market. But as I said earlier on my soapbox, we do lay out the steps that we strongly urge you to take in getting into this business, and to give you the best chance of success as you learn. We've been doing this for a long time, 20 odd years, so we do speak from experience. So please follow what we say in the program, and find that consistency first. And once you've found that consistency, then you can start to build on it and begin to make serious money. And speaking of making money, that's why we bolted on the funded Forex program. It gives you the opportunity to put that knowledge to use with some pretty large sums. You start at 5, 10, it's our money, so it's not your risk. You don't risk anything. It's $5, $10, or $15,000. You start with an evaluation count, and the purpose of that evaluation count is to prove your consistency. This is not a demo account. This is real cash. It's real hard bucks. So you are trading real money, but you are proving your consistency under the rules and management of the funded program. Of course, there are trading risk and money management rules. It's what you would expect. But if you can prove that you are consistent to yourself and to us, then we give you a whole bucket load more. We multiply it by 4. So if you're on 15,000, you go up to 60,000, and thereafter we double it. So you go 60, 120, 240, and on the way, all the way up to 2 million. As you're learning and earning, you get a kickback on profits. At the evaluation stage, it's a lump sum of 35% of the target we set. And at the higher levels, it moves to 50%. So you're earning that on a monthly basis then. So you're basically on a monthly income as you generate profits every month. And then up to the 2 million level, the 1 million and 2 million level, it goes to 60% kickback, and you're talking serious money at that level. And it's a very nice way to earn a living with very little risk to yourself. In fact, there's no risk. You keep your money, you trade it in your account, you trade our money at our risk. It's as simple as that. Finally, Anna's site, annacooling.com, you'll find all the books there up on Amazon, Kindle and paperback, and all the links to the various programs are on there as well, and the indicators. As I said earlier on, the TradingView indicators, we're literally working on them now. As soon as I finish this call, I'll be dropping back on doing that and helping the guys, and hopefully we will have everything up and running. I'm hoping by the end of next week, so but don't tie me to that because things always take a little bit longer than we expect, but I'm hoping that's kind of the plan right now. Thanks for coming along today. We are back at 2.
You changed the time.
Yes, I changed the time. I think it might be 2:15. Anyway, not sure if it's 2:15 or 2:45. Anyway, it will be on the link for you. Just click the link and you'll come over to the webinar. If you're not joining us later, enjoy the rest of the trading session. Dollar's come to a little bit of a pause point at the moment at 91.22. So that's pausing a little bit at present. Could be a little bit of a congestion phase on the way, but at the moment, you know, it's pretty bearish. So we will see what happens over the next hour or so. And remember, always as you get into the US session, always look for reversals. What's been going on in the morning often changes to the afternoon and vice versa. So thanks indeed for coming along today. Hope you enjoyed it. We will see you soon, and bye for now.